Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BILIBILI-W interim report. Bilibili Inc. offers a diverse range of services to cater to young generations in China. The company provides digital content such as user-generated videos, mobile games, live broadcasting audio dramas on Mauer Comics on Bilibili comic advertising services, IP derivatives, and other services, e-commerce, business video, comics, and game distribution activities. The significant increase in Bilibili-W stock price over the past year can be attributed to several key factors. Firstly, the company's strong financial performance, particularly its robust first-half 2025 results, has driven growth. Net revenues climbed 21.6% year-over-year to RMB 14.34 billion, fueled by substantial increases in mobile games revenue and advertising revenue. Additionally, new game approvals and releases have positively impacted Bilibili. The approval of new batches of network games and the launch of popular titles such as Three Kingdoms, 100 Generals, and Trickle Chibigo have contributed to the company's growth. Analyst upgrades and positive outlook have also played a significant role in boosting investor confidence. Numerous analyst upgrades, including Bank of America Securities' reaffirmation of a buy rating with an increased target price, have signaled growing optimism for Bilibili-W's earnings prospects. Lastly, strategic advancements, such as the company's focus on high-quality content and AI-enabled monetization, have demonstrated its commitment to long-term growth. The successful Bilibili World 2025 Expo and the company's path to profitability have further boosted investor confidence, resulting in a significant increase in stock price over the past year. The primary drivers of revenue growth for a company are primarily attributed to the mobile games sector, which saw a significant increase of 68% year-over-year to RMB 3.34 billion. Additionally, advertising revenues grew by 20% year-over-year to RMB 4.45 billion, while value-added services experienced a 10.8% revenue growth. The third-party segment also contributed to the growth, with a 24.6% increase from 2024 to 2025. On the other hand, the primary drivers of revenue decline are mainly due to IP derivatives and others, which saw a decrease of 9.3%. Net income and profit margins overview. The company's net income has shown a significant increase, with adjusted net profit rising by 15% compared to the same period last year. This growth is attributed to an improvement in gross margin, which increased from 29.2% to 36.4%. However, the operating profit margin remains stable at 25%. The increase in net income and improved gross margin suggests that the company's cost control measures are effective, leading to higher profitability. The company is indeed generating positive operating cash flow, as evident from the financial summary and various pages of the report. The key indicators that support this conclusion include a net cash provided by operating activities of RMB 3.29 billion for the 6 months ended June 30, 2025, page 13. A net cash provided by operating activities of RMB 891,772 in 2025, page 45. Net cash from operating activities amounting to RMB 2,111,819 in 2025, page 67. These figures collectively demonstrate that the company is generating sufficient positive operating cash flow, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes in the recent period. Notably, the total debt level has increased by 32.4%, from RMB 18,594,587 to RMB 24,638,025, indicating a substantial rise in debt obligations. This increase is further supported by the growth of long-term debt by $762,323 and the significant increase in unsecured senior notes by RMB 4,939,138 million. However, interest expenses have shown mixed trends. While there was an initial increase of 32% from -51,383 to -68,077, subsequent periods saw a decrease in total interest expenses and debt extinguishment losses by 6%. Additionally, cash paid for interest expense decreased by 17.6%, indicating some relief on the company's interest burden. Management is optimistic about the company's outlook, highlighting several key strategies to drive growth. The primary focus areas include deepening user engagement through evergreen titles, expanding the portfolio with new games across diverse genres, and refining live broadcasting operations and monetization features. Additionally, management aims to cater to China's Gen Z plus generation by investing in premium content that resonates with this demographic. They also plan to leverage emerging technologies such as AI to enhance operational efficiency, user experience, and global reach. Furthermore, the company will prioritize increasing revenues while controlling expenses to generate operational cash flows. With sufficient cash and operating cash flows to fund planned operations for at least 12 months, management is confident in the company's ability to execute its strategy and achieve growth. Concerns about inventory buildup and supply chain disruption. A review of the financial summary reveals that there are indeed concerns about inventory buildup in the company's operations. Specifically, a statement on page 53 explicitly notes inventory buildup, yes, indicating a potential issue with excess stock levels. This raises questions about the efficiency of the supply chain and whether it can handle fluctuations in demand or changes in market conditions. That concludes the financial summary. For BILIBILI-W, feel free to comment below, and I will be happy to answer them when possible.